Accumulating versus distributed ETFs. What is the difference and what does it mean for your portfolio? First, we need to understand dividends. Some ETFs hold stocks that pay dividends, and those dividends are cash payouts that companies make out to the holders of their stocks. And when you're a holder of the stock, you get your share of the dividends. And ETFs differ in the way they deal with those dividends. This brings us to distributed ETFs, and you can recognize them by the word DIST written next to their name usually. And the way those ETFs deal with dividends is they just give them out to you, and the cash is deposited right into your account. And you can do whatever you want with this cash. You can spend it, you can reinvest it manually, or you can just leave it in your cash account. It's completely up to you. With accumulating ETFs, usually recognized by the word ACC in their name, the dividends never hit your account. Instead, they are automatically reinvested in the fund and are used to buy more shares in the stocks that are held by the fund, which helps you grow your investment automatically. Now you must be asking yourself, which one is better? Do I buy distributed or do I buy accumulating ETFs? And to be honest, it depends. It depends on your situation. First, on taxation, depending on where you live. For example, I live in Italy, and Italy has a flat tax rate on capital gains. So anything that I make from investment, I have to pay 26% in taxes. So distributed ETFs don't make sense to me because every time they give me dividends, I have to pay taxes on them. I have to pay 26% on them. So I choose accumulating ETFs. That way I don't have to worry about taxes, and my investment grows automatically from the dividends being reinvested, and I don't have to worry about taxes until I actually sell the ETF, which is in 20 or 30 years. Which brings us to another point, is where you are in your investment journey. If you're young and you're just starting out, then maybe you don't care much about cash flow. You just want to invest your money instead of letting it, I don't know, lose value in the bank. But if you're later in your investment journey, maybe you're retiring soon, then it would make sense to have some cash flow from your ETFs. So you might buy some distributed ETFs and have those dividends come into your account every once in a while. And that's why it's very, very important to do your own research and understand what your goals are, what the tax rules in your country are, and make an informed decision on which type of ETF works best for you. Of course, I'm going to be making more videos about these topics in the future, which will hopefully help you in your investment journey on making the best decisions for your portfolio. So, follow me for more tips.